Hey traders, checking in on the stock market today. Another rejection for the NASDAQ from the resistance level that everybody can see from space. But the difference today, rather than some rotation going on, a lot of money left the market in a lot of places. We'll check in where and we'll look at the bigger picture. So we had a big sell-off today, and it was the NASDAQ starting things. We opened higher. We had the NASDAQ open higher, IWM gaps up. We had a lot of higher opens out there. And that does two things. Well, it really does one thing. So we open right up under resistance. We see our clear rejection from the NASDAQ futures chart. And that was just a silver platter for the bears as far as, really making it easy. Clear resistance, everybody's watching. We reject. That led to bulls exiting positions. That leads to shorts jumping in. And then we rolled over significantly. So with the higher open, RSI levels are not extended, which means we can drop a lot further. And someone made a comment in the chat room today, and it's on point. At that point in time, they made the comment, we were flat. And they said, we're slightly green here, but it feels like a big red day. And it's because when you open higher, you can drop a whole lot before you reach extremes. So the NASDAQ, with its massive drop today, I guess not massive, very large drop today. So this drop was from the high, that's massive, 4%. But look at the 4-hour RSI. It's not even close to oversold. So I love playing oversold bounces. They're one of my edges. I love them. But I'm not looking for bounces in this environment. And the reason is I have a very clearly laid out criteria. I find as a trader that I have a lot of clarity when I completely eliminate one side of the equation. I'm not constantly looking, should I be bull, should I be bear, should I be bull, should I be bear? I eliminate one side of the equation. So yesterday, once we rejected from this resistance level for a third time, I said I cannot be bullish. The NASDAQ or semiconductors or our weaker sectors, biotech, cannabis, whoever it is, cannot be bullish those names if this level is resistance. And I am not looking for bounces unless two things happen. Either, one of two things. Either we get historical extreme RSI levels, then I am interested. So that would mean, the 4-hour RSI, if it drops down to 20, I'm looking for a bounce. But we're not even close to that happening. Or that resistance breaks. Those are the only two criteria. So I took a logic course in college, and I really like how you can just simply lay things out. I love the if-then statement. If X, then Y. If neither A nor B, my two conditions I just laid out, if neither of those are taking place, I am not looking bullish. I don't have to make a decision. All I do is check. Is this happening? No. Is this happening? No. Not looking bullish. It completely eliminates one side of the equation, and I only have my bear glasses on now until one of those two criterias are met. So I know that the next trade that I'm interested in here is going to be hourly lower highs on tech names and semiconductors. If we open higher tomorrow, I'm scouting hourly lower highs. If we open lower tomorrow, I won't jump into a bear entry, but I'm also not going to be looking at a bounce unless we are in historical oversold levels, not for an individual name. If SHOP is crushed on the RSI and it is at historical levels, I need to see the ETF at historical levels. And this is something that comes from cryptocurrency. If I'm trading an altcoin and we got Bitcoin here and Bitcoin's RSI is at 30 and the altcoin's RSI is at 22, I know that we can see this altcoin's RSI get crushed because if Bitcoin's 30 RSI drops down to 25, this 22 RSI is going to drop down to 17 or beyond. So the RSI for the indices and for the major ETFs matter much more to me than individual names. So today's the kind of day where it was a little bit frustrating for me because I like to, again, absolutes. I like the absolutes and no decision making, and I have to show discipline. So I knew today I had a couple things going on. I was going to be away from the computer. It was not a trading focused day for me. And so I clearly laid out, I'm not trading today. And I just stuck to it. But then looking in hindsight, oh God, right? Clear resistance right off the bat. So next time around, I'll give myself an entry opportunity on the morning, set a stop loss, and then try and let a trade play out, and then go do your stuff off the computer. But that's where we stand for the NASDAQ. Bears in complete control. Again, we're not oversold. So I know there's this urge to play bounces. I know there's this urge to be looking long. But again, these criteria have to be met because there's nothing saying that we can't. Again, when the RSI for me as a piece of my bounce trading strategies, it often tells me when I'm looking to buy, but it more often tells me when I'm not looking to buy. And 4-hour RSI at 38, that reminds me we can absolutely see another leg down, and I have no interest in looking for an oversold bounce. Hourly oversold, 15-minute oversold, it doesn't mean anything to me in this market environment. If we're in a blue sky breakout market and we're seeing 15-minute oversold conditions when we're an uptrend on every single time frame, that is different. But if you are in a weekly, a daily, a 4-hour downtrend, then those shorter term timeframes being oversold are not meaningful at all. Because what they do is what we saw today is they just grind and cool off these little weak bounces, with every single one setting a 5-minute lower high. At no point today did the 5-minute trend change. It was just a constant 5-minute downtrend. And every little bounce, the RSI just keeps cooling off. And even on the 15-minute time frame, we did get extreme, absolutely, but these little green candles kept it from getting too extreme. And the hourly RSI didn't get extreme. Look at just a few days ago. A few days ago, the hourly RSI got down to 19. So today, when it's down at 25 and 23, all I have to do is look back 2 days and say it can absolutely go lower. So hourly RSI is much less meaningful to me in this market environment. It's the longer term levels that matter. And that was the same when we were looking at, the bounces down around when we were having the whole Ukraine situation taking place. I keep forgetting not to say those words. I think YouTube classifies us as a political channel because of how often I say the wrong keywords. Anyways, back then, the 4-hour RSI was at historical bounce levels. I could scroll back years and I could say, okay, 4-hour RSI hitting 20, historically speaking, doesn't mean it's going to happen every time, but probability-wise, I know we're likely to see a bounce. So that's when I was looking to play bounces in the face of weakness. And I did it multiple times, but both times there were criterias as to why. And one of the criteria was longer term RSI levels and historical bounce levels on those RSI. S&P 500, daily lower high is set. So we know that if we're going to be confident in a weekly higher low being set, we must confirm the daily trend change. And so we were watching to see, can we form a higher low and higher high when this bounce tops out? After today's action, that becomes a lot less likely. It's still possible, but the retracement size is very significant. The close at the low of the day is very significant. And again, this wasn't rotation. We've seen plenty of days in the past month where tech and semis are very weak, and XLV and XLF and other sectors are picking up the slack and holding up the S&P 500 much better. And that's some form of rotation going on. But today, as we'll go through here in all these major sectors, money left the market today. That was very clearly what was going on. And so it is decreasing the probabilities that a daily trend change is going to occur here. But we do still have the support to be watching, which on SPY for tomorrow is 435.61. And again, next time we bounce, we're just looking for an hourly lower high. SPY only just kissed hourly RSI oversold into the end of the day. So bears will be waiting for an hourly lower high next time we bounce. NASDAQ, we went over. So where are we looking at from here? We did drop to a fresh low. So the daily downtrend remains. And if we can't get over this resistance, bulls are not going anywhere on the daily chart. So a bear break to a lower low, which has us continuing to look down towards that fear low, 317.06 on QQQ. And again, we got earnings coming up for the sector. And then we got FOMC in 13 days. And those are going to be two very impactful things for this sector, in my opinion. Semiconductors still weak, so daily lower high is now set on this bounce. We topped out at 253.27, pretty much a double top with that level here first thing today. And now it's all about the low of 237.09, 237.32. We got a double bottom there. And again, this is one of our weaker sectors. So I have zero interest in looking bullish in our weaker sectors because we're not nearly oversold enough. Look at the daily RSI on SMH. It's not even close to daily oversold. Even the hourly. Today, because we opened higher, we dumped all day with a significant drop percentage-wise from the high of the day. From the high of pre-market here, even bigger. I guess that was the high of the day. 5% drop to not even get to hourly oversold. Tons of space for an hourly lower high to be the result of the next bounce. Tesla had a bullish earnings reaction, and you can look at Tesla. That's why we opened higher for the most part. And trying to offset Netflix's terrible earnings reaction, Tesla had a bullish earnings reaction, but it led to a lot of higher opens out there, and then bears took over. So a big drop day on Tesla. And Tesla now has a line in the sand level for me. This 973 level is very important because if that level breaks, we confirm a weekly downtrend and we confirm a monthly lower high. And then at that point, the all-time high comes off the table for me as far as in the near term. And we're then looking at a high, low, lower high, and we'll have to be watching for a monthly high or low, anything above 700. But we'll then be watching for the potential of a monthly equilibrium shaping up if that 973 level breaks. So very important in the short term to be watching that level. A lot of space for an hourly lower high to be the result of the next bounce from here. Healthcare. So healthcare is a potential weekly bull flag. It dropped notably today, but we would have to drop down and break 136.53 to say the weekly bull flag is now a lot less likely. The best case for the bulls would be to save it here, hold the low, and then break that high to regain a daily uptrend. So that's still a possibility. It's definitely not as weak as other sectors, but again, just another sector that did have a big red day today, as pretty much every name that I've looked at did today, which is indicative of money leaving versus flowing around to other places. XLF, big bear candle. Can the bulls confirm a daily trend change back in their favor? Where we're looking at retracement size, so we need the higher low and higher high. And at this point, the retracement size is significant. 60% plus retracement, so not ideal. Still possible, but bulls have work to do. We're just going to look for an hourly lower high to be the result of the next bounce. IWM, big drop today. We confirm a daily trend change to the bulls. And now we zoom out, and that's potentially another weekly lower high being set. So a key support here is 195.88 because we do have a weekly uptrend. We went with a higher low and higher high. And if we now drop down and break that 195.88 level, we are right back in a weekly downtrend. So key support coming back into play. The biotech sector we know has been a lead bear, and it is a daily bear flag. As soon as we broke this inside bar bull yesterday and then pulled back, we broke that this morning. I was just recalling a message I made in the chat room. I must have made it today and not yesterday. But I was talking about the bear flag because the inside bar broke bull. Yeah, significant relative weakness to IWM, daily bear flag potential. Inside bar bull break with zero follow through, and the red flags pretty much right out of the gate. There's your bull break, and then you just completely dump. There is no follow through there. That's a red flag. So again, I know people are looking at the biotech sector and saying, oh, we're so beat up, but we're not oversold. We can always see another leg down. We're not oversold on the weekly, not on the daily, just getting there on the 4 hour, just getting there on the hourly. We're not extreme is what it boils down to. So again, I'm not going to try and play the weakest name bullish. There's no, the probability of nailing the bottom and being a hero is low. And I will attempt it at some points, again, in the extreme scenario, the buy the news scenario that was shaping up with that situation overseas. And there were a couple times where I do it, but for the most part, again, just wait for the bulls to prove something. Have a clear level to play off of. I'm in the same space, in the crypto space recently where it's just patience. It's just really patiently waiting, knowing, not caring if I don't nail the bottom, but waiting for momentum to be at my back if I'm going to be looking to play bullish to be able to be profitable, as opposed to trying to step in front of the speeding bear train that is currently, or that was there today. Energy sector. So again, energy's been one of the strong places. This is the weakest energy sector day in over a month, a long time. So again, it definitely gets our attention. This is the biggest red candle day since, maybe this one rivals it, but that's going back almost 2 months. So it stands out. We got utilities. They've been extremely strong. Utilities just double topped and is at risk of losing the daily uptrend. We would then zoom out for weekly consolidation. But again, it's the sectors that were offsetting some of the tech sector weakness over the last month plus. They're seeing some weakness now at the same time as the tech sector, which was the biggest difference today. And not only here, we're seeing it in the commodity space as well, which we will get to now. First, natural gas, just keeping an eye out for a falling wedge. I drew this morning, and we're battling this resistance level now, so just a little tweak of that resistance. Why am I looking for an hourly falling wedge? Because in my opinion, a daily high or low is the most likely scenario after that massive bull run, after a significant pullback, pulling back 18% almost, 17, testing daily EMA 12. So I just keep an eye on this pattern, because if this breaks bull, that'll be the indication that our daily high or low is shaping up. Really need to clear 714, but hourly tightening range right now within this potential falling wedge. So the commodities that saw a lot of weakness as well today, silver, big drop. I stopped out of my SLV swing position. I forget exactly when I entered that, probably sometime back here. So stopped out of SLV with this big pullback. And at this point, we've been scouting it for a few days, but very clearly our weekly lower highs are set. And now we have to be watching for the potential that we confirm a weekly downtrend, which would very quickly shift the momentum significantly in the metals space. And gold is holding on better. I did not stop out of GLD. And you can see on the daily chart here, holding on way better. And again, it's risk on, risk off. So risk off mindset, some fears, some money leaving the market. People are bailing out of silver a lot faster than gold. When there's confidence in the metal space, silver's going up a lot faster than gold. But gold itself still looking all right. We'll have to see how that shapes up over the next couple of days, but not nearly as weak as silver. And again, I know without looking, if I look at an XAU XAG chart, big green candle today showing me relative strength. And I clearly drew this in a recent video, and we are in an equilibrium here. And I was talking about how the metals bulls want to see a bear break here, because that means silver would be leading the way to the upside. That would mean aggressive risk on in the metal space. But we bounced right off that level, probably right after I drew this chart. And now we're testing that resistance level. So stopped out of silver, stopped out of miners. Big drop in the miners. Look at that bear volume. And again, same thing. This is the weakest day for miners. Fairly close one day mixed in there, but it's been almost 2 months that we've had a day this week. So weekly consolidation is underway, and the size of this drop now has a daily lower high as the most likely scenario of the next bounce. So a notable shift taking place here in the metals and the miners, and I stopped out of CCJ. Notable shift in uranium. I talked about the importance of having a clear line in the sand level, and my line in the sand level was breached. And I was talking about how if 29.35 were to hold, then it would be the same as it has been. And we would just continue what has been working and that uptrend. But if that level breaks, we will say, uh-oh, this time it's different. And that's now what we have after today. This is different. We have a significant pullback on the weekly. Anything above 26.16 is just a weekly high or low. But we were down 10% today. And some other names are even down harder. We have UUUU breaking this rising wedge bearish and giving back a month of upside. So again, these are places that were holding on really well despite tech, semiconductor, despite our lead bear sectors, they were still holding strong. And today that shifted. So again, notable that money was leaving the market today, and the places that were holding up well, not doing so today. So we're going to keep a close eye on that and see if that continues to be the case. But checking in on the dollar, bulls bought the dip. Maybe a little head and shoulders type pattern could be forming here, 12-hour. But overall, still keeping those daily higher lows, so bulls keeping confidence. We had the 10-year still strong, holding on just fine. And we have TLT, daily bounce, no follow through, but bulls did hold the recent low. Have to get back over 122 to see a little short-term shift in momentum to try and see this bounce follow through a bit. So overall, a big red day. Not looking for bounces because we are not meeting either of my two criteria. Patiently waiting for hourly lower highs to be looking for potential bear entries. And again, just taking it one day at a time from here. Tech sector earnings next week will be notable. We're continuing to see the divergence between tech names, where Apple is down 0.5% today and Facebook is down 6%. Again, ever since Netflix earnings, the tech sector just things started doing one of two different things. And if you look at, if we want to compare Apple divided by Facebook, this chart is going to be exploding to the upside the last 2 days. So Apple holding on way better than most tech names, and Facebook just absolutely getting crushed in response to, in my mind, I don't do the fundamental game, but I would imagine that this is people saying, Netflix subscribers leaving, and this big social platform, not social, but everybody falling in love with it platform, and it's getting crushed. And so people are thinking, well, people are going to be leaving Facebook because now Facebook's got some alternatives, and Snapchat and Instagram and all this. And I feel like that's the mindset of what's going on in the market to make Facebook so weak the last 2 days. And it also has to do with someone else made the observation. Apologies for not forgetting or not remembering exactly who in the chat room, but they made it might have been Mr. F, talking about how the names that did well their last earnings, Facebook gapped up last earnings. Nope, wrong one. Apple gapped up last earnings. Wasn't a huge gap up, but it was a bullish reaction after we had been seeing some weakness. And we know Facebook had the absolute all-out dump on its earnings. So the price action the last 2 days is reflecting what the last earnings reactions did as well. I believe was Google a bull reaction as well? It was. And Google has been holding on a bit better than other names, but it confirmed a daily bear flag, and Google's about to break. We're testing a key level here. Google is close to breaking the fear low. Any name that is breaking the fear low is definitely weaker than names that are not. Amazon's holding on better, but it too dropped to that lower low. No weekly higher low being set on Amazon. No daily trend change back to the bulls. So in summary, believe what the trends are telling us. And the trends are telling us that the tech, semiconductor bears, and all those other weak sectors are in complete control. And I'm not going to fight them on a daily basis. I'm going to believe them. I'm going to trade with that trend. And there will eventually come a time where I look to go bullish when things are still very weak, as I did a couple times a few months ago. But not yet, because we're not extreme enough. All right, hope you're well. Feel free to ask any questions. I'm out of end of video content, so we're going back to some recycled Puerto Rico videos. Do good things.